So, good morning, good afternoon, good evening. It depends on when and where you are watching this video from. Once again, I welcome you to the other blog video, okay? And I'm very, very happy to have you here. Oh, nice. So, without wasting my time, let's move on. Okay, so what are other blogs? Okay, what are other blogs or what are OBs? OBs are the same as other blogs. Good. Other blocks are candles where market makers, when we say market makers, we mean banks, have placed their positions. Generally, the market returns to those candles and they are never violated if they are really obvious. Okay, so other blocks are where banks or the big institutions they place their orders or they place their positions. They are called block of orders, big orders, block of orders. We see in normal life when somebody has a lot of money, because we say this guy has a block of money. Okay, so that's where this term came from. Other blocks. That's where banks place their orders, and their orders are called blocks because they have billions of dollars in their portfolio. Okay, so there are two types of orders. There are two type of there are two type of orders. Okay, so not necessarily break of. Let me edit this part. Okay, so there are two type of orders. We have the bullish order blocks and then we have the bearish order blocks. Now let's talk about the bullish order blocks. So the bullish order block is the last bearish candle before the bullish movement that caused break of structure. Let me bring the code that caused break of structure. Break of structure high. Good. So the bullish order block is the last bearish candle before the bullish movement that caused the break of structure high. Okay, represents a high possibility of holding price when the price returns to it. So we will go to the chart and then have a look at the blocks. Okay, have the look at the blocks. But before that, let's get the knowledge. Okay, let's get the idea behind it. I don't want you guys to be chew and poor. Okay, you have to understand why the market is moving like this, why the market is doing this, why this and that. Okay, the psychological, the reason behind it. So we have bullish order block, and I said bullish order block is the last bearish candle before the bullish movement that caused the break of structure high. Represents a high possibility of holding the price when the price returns to it. So when price returns to bullish order blocks, they usually retains the bullishness. Okay, so let's move on to bearish order blocks. Now, the same thing. Bearish order blocks. The bearish order block is the last bullish candle. Remember, we said so. The most important here is last. Here is you can highlight the last. Here we are talking about last bearish candle, and here we are talking about last bullish candle. Okay, so here we are talking about last bearish candle, but in bearish order block we are talking about the last bullish candle. You get it? So the bearish order block is the last bullish candle before the bearish movement that caused or that break the market's structure lower. Okay, represent a high possibility of holding the price when the price returns to it. So the bearish order block is the last bullish candle that caused the break of structure. Okay, or that broke the structure's previous low. Okay, that broke the structure's previous low. So now let's move on. What are valid OBs? Because some are not valid, some are valid. Valid order blocks must have these three things. Okay, the first one is it shouldn't be within the liquidity. You will understand it when we go to the chart. Okay, so it shouldn't be within the liquidity. Two, it should be in a discount or premium. I hope you know what discount and premium means because you've watched the video on um, uh, Fibonacci. Okay, you've watched the video on the Fibonacci too, so you know what discount and premium means. Okay, so the order block must be in either a discount or premium. So this means that if we are talking about bullish order block, it should be in discount, and if we are talking about the bearish order block, it should be in premium. You get it? So it must have volume. Okay, which is the first value gap. It must have volume, which indicates that truly it was banks that caused that movement, or it was a big institution that caused that movement, and that makes it a valid order block. So your order block should have these three qualities before you can call it a valid order block. Now, another thing is breaker blocks. Okay, so on my chart, you can see that I don't use OBs. I use POIs. Why? Because some POIs are order blocks and some POIs are breaker blocks. I don't want to separate them. Okay, so either breaker block or either order block, I call them point of interest. Some people call them area of interest. They are all the same things. So what are breaker blocks? These are order blocks which have been violated. Okay, so when order blocks is violated, it becomes a breaker block. Okay, so when a bullish order block is violated, it becomes a bearish breaker. Okay, it becomes a bearish breaker. And when a bearish order block is violated, it becomes a bullish breaker. So take note. Okay, so now I think you have to go to the chart and then have to go to the chart and illustrate what we've just seen here. Okay, go to the chart and then illustrate what we've seen here. So I think this is BTC USD chart, and let me remove this my kill zone indicators, and I think let me go to 4 time frame. Okay, let me go to 4 time frame. Let me remove all drawings. First, we are talking about bullish order blocks, so let's have the bullish. So let's focus from this. Good. This is what I'm looking for, the vertical arrow. Good, we are focusing from here. Here, let me. Okay, it's okay. We're focusing from this area to this area to this area. Okay, from this area to here. Nice one. So we are saying that you can see that we are in bearish. We are in bullish trend. Bullish, 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 bullish. Okay. Why? Because we are forming higher highs and then higher lows. Okay. So this is a BOS, another BOS, and then another BOS. Remember, we are looking for bullish order blocks. Okay. And let's go here. Let's go here. What did we say? We said that the bullish order block is the last bearish candle, okay? The last bearish candle before the bullish movement that caused the break of structure. Okay, so let's go here. So here, the last, this is the BOS. Okay, test. BOS, BOS. Good. So it means that this is the last bearish candle, okay? The last bearish candle that broke this structure. I hope you all can see it. Yes, it is the last bearish candle that broke this structure. Okay, and what happened when price came back? When price came back to the order block, it went up again. Okay, so this is a bearish, sorry, this is a bullish order block. This is a bullish order block. Now we have another order block here. You can see it. This is the last bearish candle. That's called break of structure here. Okay, and let's stretch it. Okay, let's stretch it. When we talk about breaker, we come to breaker block. You understand it. I will come back to breaker blocks. So this is the last bearish candle before they move. So we are expecting that when price came here, it didn't trigger. Okay, it didn't go up. We will know the reason in short. But let's focus on this one. Okay, let's focus on this one. You see how price rejected this order block. This is what I'm talking about. This order block. Okay, this order block. So you draw from the high to the low. Some I don't add the rake. I add everything. Why? Because I wait for confirmation entry. So whatever the order block is, I'm not adding the wick or and the body. I'm not so much interested in that area. I just draw my order block and then wait for my confirmation entry. That is what I do. Good. So this is the last bullish candle that broke this structure, broke this high. Okay. So it makes this last bearish candle become the order blocks. So this is where the banks they place their trade, they place their orders. Okay. So when price came here, what happened? Price quickly jumped again. Okay, and then broke another structure, so making this order block very, very, very important. Very, very important. So I don't want to waste much of time. I want to make everything simple, simple for you. Okay. So this is what a bullish order block means. Now let's get example of bearish order blocks and then move on to the next thing. Example of bearish order block and then move on to the next thing. You can see that we have a break of structure here. We have a break of structure here. And put candlestick, I'm talking about bearish candle. Let's go here. Bearish order blocks. Let's go here. So bearish order blocks, the bearish order block is the last bullish candle before the bearish movement. That's break the market structure lower, okay? Representing high possibility of holding the price when the price returns to it. So now let's go back to the chart. You can see that we have a break of structure here. Let me remove this and then we'll come back to it later. We have a break of structure here. Yeah, this area we have a break of structure. We have a break of structure here. And what is the last bullish candle? We are looking for bearish order block. So it is the last bullish candle. And where is it? This is the last bullish candle. Okay. If you can see that price didn't touch it. But let's go to 4-hour time frame and see if yes, yes, there is another block in the 4-hour time frame. Okay. You can see that what's happening when price touched the 4-hour order block, it just started to drop. And last week, those my VIP channel, I gave this setup. And we had more than 265 clicks last week. Good. So it is the last bullish candle that caused this break of structure. Okay. And I was talking about valid and invalid order blocks. Okay. So assuming that there was liquidity here, equal lows somewhere here. Okay. Equal lows somewhere here. I wouldn't have considered this order block as valid. Why? Because there is a liquidity above it and it is within liquidity. Remember our rules. Our rules says that, remember our rules say that it shouldn't be within liquidity. Okay, it shouldn't be within liquidity. So if liquidity was above it, I wouldn't have traded it or considered it as a valid order block. Okay, as a valid order block. So now let's move on. Another rule is it should be in discount or premium. This is a bullish, this is bearish order block, so it should be in premium. Now, you know how to use the Fibonacci. First questions, you ask for the high and the low. This is the low, okay? This is the low. This is the high of the trend, okay? This is the high of the movement. Now, you plot a Fibonacci from the high to the low, okay? You plot the Fibonacci from the high to the low. Good. So you can see that it is above 50. The order block we selected is above 50. Okay, it is above 50. It is even above 78.60, which makes it very, very, very powerful order block. Okay, so the first rule is it shouldn't be within a liquidity, and there's no liquidity above it. Okay, the second rule is it should be in discount. Okay, it should be in discount or premium. So here it is a premium because it is a bearish order block. It's a sell order, so we sell in premium. So the order block is premium, making it very, very valid. Now, good. Okay, so the next thing is it should have volume. Okay, it should have volume. The volume is this big bullish candle. This big bearish candle show you that there is a volume here. Okay, there is a high selling pressure here. Okay, so this candle is engulfed. You can say that it should be engulfed or it should have a big volume. They are all the same. Okay, since we have this big bearish candle, it means that the other block is very, very valid. Okay, so all the three rules are very, very intact. Okay, so you place your, when we get to the entry types, you'll understand. But before then, your stop loss should be above the order block, and then your entry should be here, just beneath the order block. And your take profits, you can target the next swing low, okay, which is this one. You can target the next swing low, which is this swing low, okay. This is this swing low. So if you have bagged about 420 pips, 402 pips, okay, this is a lot of money, a lot of money. 400 pips on 0.01 lot size is $40. On 0.10 lot size or 0.10 lot size is $400. On one standard lot size is $4,000. Okay, so just for one position. Okay, so this shows you how powerful the order block theory is, the order block concept is. Now, quickly, let me jump to breaker block, and then we come back, or we end the order block theory. Okay, so I said that. What did I say? I said that breaker blocks, they are order blocks which have been violated. Okay, so when market didn't respect a breaker block and then it trades below it, the order blocks become, when a market or the price didn't respect this order block, didn't respect the order block, and they trade below it, the order blocks is still valid, but here it is not an order block again, it's called a breaker block. Okay, when the price or the market retraces back to it, it drops. This is exactly what happened here. Okay, this drop here, this drop. Okay, so this is exactly what happened here. Good. We had a 4-hour order block here. This is a clean 4-hour order block. But when the price reached, instead of the price to go up, the price went down. Okay, so here this order block tends to become a breaker block. Okay, this order block tends to become a breaker block here. Okay, so when price come back here, it retraces back to the breaker block and then it dropped. Okay, and then it drops. So this is what breaker blocks means. So when you see a POR, point of interest, in my area, in my chart, it's either a order block or breaker block. Okay, so that is what order blocks and then breaker blocks means. Thank you very much, and then see you in the next video. The next video I'm going to talk about entry types. Thank you very much.